Ladies and gentlemen, thank you for standing by. Welcome to the Sapiens International Corporation First Quarter 2020 Results Conference Call. At this time, all participants are in a listen-only mode. A brief question and answer session will follow the formal presentation. For operator assistance during the conference, please press star zero. As a reminder, this conference is being recorded May 14th, 2020. With us on the line are Mr. Roni Al-Dor, President and CEO, and Mr. Roni Giladi, CFO. Before I turn the call over to Mr. Roni Al-Dor, I would like to remind participants that this conference call may contain projections or other forward-looking statements, and the safe harbor provisions in the press release issued today also apply to the content of the call. Sapiens expressly disclaims any obligation to update or revise any of these forward-looking statements, whether because of future events, new information, a change in its views or expectations, or otherwise. During the course of the call today, we will refer to non-GAAP financial measures. A reconciliation schedule showing GAAP versus non-GAAP results has been provided in our press release issued before the market opened this morning. A replay of this call will be available after the call on our investor relations section of the company's website or via the website link, which is available in the earnings release that we published today. As a reminder, the quarterly earnings release was issued before the market opened this morning, and it has been posted on the company's website at www.sapiens.com. I will turn the call over to Roni Aldor, President and CEO of Sapiens. Roni?
Thank you, operator, and thanks to everyone who is joining us today to review our first quarter financial results. I hope everyone is healthy and safe. I will start with a review of the quarter, followed by an update on our businesses. Roni Giladi will follow with a detailed overview of financial results and share our outlook for the remainder of 2020. Our first quarter performance reflects our continued focus on supporting our existing customers and closing new business. We reported 17.9% revenue growth in the quarter and increased operating margin by 80 basis points to 16.1%, with both P&C and Life and Pension contributing to our year-over-year growth. We maintain our momentum through the end of the quarter, signing several new logos, even in late March after the COVID-19 outbreak started. Overall, COVID-19 had only slight impact in the first quarter as we prioritize performance while adjusting our approach to operations. We work closely with our large customer base, supporting them in their transition to remote work formats and addressing the challenges they face in the transition. The vast majority of Sapiens employees had a tool to work remotely with the required infrastructure and guidelines in place. As a result, our transition to work from home format was relatively smooth. I'm incredibly proud of my team's hard work in this unique and challenging environment, and I would like to mention the fast adjustment that our customers did to shift to work remotely and continue their customer services and transformation project. Today, most of our deliverables to our existing customers continue as planned, and we see minimal impact in our revenue stream for existing customers. Having said that, we anticipate delay in the implementation of new customers onboarding later in the year. We see three possible outcomes of new customers. Number one, continue as planned, entering the agreement with us, as this is a strategic step for them. Number two, entering Blueprint as a starting point of the implementation. Or number three, placing the agreement on hold until there is less uncertainty from the COVID-19. Again, the overall impact of delay of new business is not material. As I mentioned, despite the COVID-19 outbreak, we had several new wins and go lives during the quarter, and we have expanded our ecosystem of partnerships. Illinois Mutual Life Insurance chose Sapiens for its Life Digital Transformation project. The American insurer plans to deliver our Life and Pension offerings to optimize sales, drive new business, and provide a superior customer experience. Preferred Physician Medical Risk Retention Group went live with Sapiens P&C offering on the cloud. This client selected our core suite as part of their technology and business transformation strategy to support their growth strategy and next-gen customers. SA Taxi from South Africa went live with Sapiens Edit Suite to offer its client new short-term business insurance product. Growing our business with our existing customer base has always been a priority for Sapiens, and we do see more and more cross-sell and upsell opportunity across our portfolio. In February, one of our Tier 1 clients in South Africa went live with Sapiens P&C Suite. The selection of our P&C solution followed the successful deployment of our Sapiens Life and Pension Suite. As I mentioned earlier, we see many more selling opportunity with our existing customers. We are now enjoying the return on our investment in our Life and Pension policy administration business that include expansion into group life and improvement of overall technology stack of our Life and Pension Suite. As I mentioned in our previous earnings calls, our Life and Pension policy admin solution was awarded the Excellent Award for its advanced technology in January. In parallel, we started to see growing interest in our Life and Pension solutions. Following the COVID-19, the life insurance market is already reporting a spike in the sales of new life policies, which we expect to accelerate further the modernization of life and pension system, which had slowed down in recent years. This trend is already reflected in our growing pipeline for our life and pension policies admin in EMEA. In the P&C, we continue to gain momentum globally in the first quarter. We grow our share with the existing customer as they expand their business with us beyond core to include digital, reinsurance, analytic, and managed services. We also have successfully grown the adoption of cloud deployment, which gives customers a more flexible deployment model. I'm delighted to announce that we crossed the 100 customers mark for the reinsurance solution. Sapiens Reinsurance Solutions allows insurance to manage their entire range of reinsurance contracts and activities which reach accounting and reporting functionality. Sapiens Decision is seeing continued expansion in insurance. Decision provides insurance carriers with a platform to develop unique solutions with complex business logic. More carriers are now embracing this solution, either with our policy admin or with a standalone offering. Gartner cited Decision in their Hype Cycle report as a sample solution for risk and compliance decision management. On the digital front, our recent acquisition helped us to expand our digital offering and improve our competitive standing. As you may recall, in February, we completed the acquisition of a German-based insurtech Sumcumo. We started integrating our operational and sales team and have already realized the benefit with larger market presence in DACH region and expanded digital offering that we can leverage. In terms of service model, across all of our products, we see an increased demand for managed services. Our managed services offering brought tremendous value to our customer during the COVID-19. The platform allows carriers to focus on their business while we take care of the operational part of their technology. We expect continued growth for this mode of services. On our ecosystem, we have added several new partners. Heather App places integrated real-time geographic risk data in our P&C core suite. Splice Software help us to provide streamlined billing, claims, marketing, and customer experience communication solution to insurers. Our investment in R&D provides continued improvement across of our offering, which is receiving recognition from leading industry experts. Sapiens work closely with leading industry analysts such as Gartner, Celent, Navarrica, and SMH, which gives us confidence in our product roadmap on our area of business focus. We are aligning our priorities to match the insurance industry needs and trends, both from market coverage and product offering perspective. Sapiens is well positioned to benefit from macro trends impacting our customer, which include the migration from legacy system and adoption of digital capabilities. The current business disruption related to COVID-19 highlights the need for legacy insurance companies to modernize their platform so they can improve remote access and offer digital services, as well as maintain compliance and meet regulatory requirements. COVID-19 has proven to be an accelerator of the trend that began in the last few years. Today, more than ever, it has become essential for all carriers to increase digital capacity. Today, shoppers expect quote, insurance purchase, and service delivery through a variety of digital channels. This market shift will compel carriers, small or big, to complete their digital transformation. From Sapiens' point of view, we have optimized our mode of operation to meet the new business reality. First, our partnership approach with our customer has proven to be an advantage, especially these days. In the last year, we have invested in developing and expanding our customer success executive team. Our direct customer relations have been a beneficial aspect of our business model, especially in this challenging business environment, as we help customers address their new and unique challenges to COVID-19. In return, this helps us to secure our recurring revenue while increasing sales within our customer base. The close relationship we enjoy with customers give us meaningful knowledge of their business challenge, unique operational environment, and their team. This connection helps us be highly accurate in our response to their needs and delivery of additional solutions to enable their growth and success. In fact, we are increasing our customer success team to meet the demand from existing customers. As we adapt to the new normal, our own operations have gone through some changes as well. The global business environment has rapidly evolved in reaction to COVID-19, and the agile response to Sapiens team to these changes is increasing our digital engagement model. As we look at the marketing in the context of COVID-19, we believe that the B2B sales and marketing will have to be replanned. As a result, we are adjusting our marketing mix through digital channels. Today, as many industry events are canceled or postponed, we are accelerating our digital marketing activities with a new offering, like digital educational session to our customer and prospect. In the move from face-to-face meeting to information-rich virtual events, we can include more people from our team. By bringing a bigger team into our customer and prospect interaction, we can provide more value and improve outcomes. We are increasing the frequency of FaceTime engagement through virtual meeting, creating more touch points with the market. We already see the benefit of the action we took. Despite the COVID-19 economic, new prospects and existing prospects are continuing discussion and progressing in their engagement with Sapiens. Our priority remains executing in our growth strategy. For the remainder of 2020, we will continue to grow where we have already landed and leverage our investments. We remain focused on building a unified global platform of innovating digital insurance solutions to advance our competitive position as one-stop shop for insurance software with enhanced products and services. We seek business growth organically and with M&A, while we see further opportunity to increase operating efficiency and improving margins. While there continue to be near-term uncertainty from COVID-19, we remain focused on execution. We've taken appropriate action to provide the necessary flexibility and operating efficiency within the current circumstance. Strong demand for our digital product, combined with a high recurrent revenue and a solid balance sheet, position us for success in this challenging environment. I'm confident that as the global economy recovers, Sapiens will emerge as stronger and well-positioned for continued growth. I would like to turn the call over to our CFO, Roni Giladi, to provide more detail on our financial results. Please go ahead, Roni.
Thank you, Roni. I will review the first quarter non-GAAP result, followed by comments on the balance sheet and cash flow, and end with our guidance for the remainder of 2020. Revenue in the first quarter of 2020 increased 17.9% to $90.5 million from $76.8 million in the first quarter of 2019. The organic revenue growth was 10%, with the balance coming from the impact of the Calculo and Sumcumo acquisitions. Eliminating the currency impact, our organic growth was 11%. Our revenue in North America totaled $44.6 million, an increase of 16.8% compared to last year. Revenue in Europe totaled $40.2 million, up 25% increase compared to last year, mainly due to the last two acquisitions. Revenue from North America and Europe combined represents 94% of our business. Gross profit this quarter totaled $39.8 million compared to $33.1 million in the first quarter of last year. Our gross margin increased to 44% from 43.1% in the first quarter of last year. Operational expenses, R&D and SG&A, including the investment from Calculo and Sumcumo, remained consistent in this quarter with the first quarter of 2018 of about 28% of our revenue. Moving to operational profits. Operating profit totaled $14.6 million this quarter, compared to $11.8 million in Q1 of 2018 and $14.3 million in prior quarter. Operating margin increased in the first quarter to 16.1%, an 80 basis point improvement from Q1 of 2019. Eliminating the currency impact, our operating margin would have been 17% based on currency of Q1 of 2019 results. Operating margin reduced slightly from Q4 of 2019 to Q1 of 2020 from 16.5% to 16.1%, primarily due to lower operating margin of the acquired entities, which we intend to improve during the year. Net income attributable to Sapiens shareholders for the quarter was $10.4 million, compared to $8.4 million in the first quarter of last year, which reflect 24% growth. EPS increased to 20 cents from 17 cents of last year. Turning to our balance sheet. As of March 31st, we had cash and cash equivalents of $80 million. In order to strengthen our balance sheet in response to COVID-19 pandemic, we took a loan from commercial bank in the amount of $20 million, with installment payment over the next 2 years. This new loan brings our total debt to $80 million, of which $60 million is spread over 6 years and $20 million over the next 2 years. In the first quarter, we achieved $3.8 million in free cash flow, which is below our quarterly average due to significantly higher free cash flow in the fourth quarter of 2019. The combined average free cash flow of the 2 quarters is in line with our target quarterly free cash flow. In spite of global impact of COVID-19, we are announcing a dividend of around $7 million or 14 cents per share. Paying the dividend reflects our continued confidence in our business, our ability to generate cash, and our commitment to our shareholders. The dividend will be payable on June 10, 2020 to the shareholders of record as of May 27, 2020. In closing, I would like to turn to our guidance for 2020. The global economy experienced significant disruption from COVID-19, and we have managed the pandemic effect for both our employees and our customers worldwide. That said, our business model has shown its strength under this new business environment. First, from an operational perspective, we are a software company which fortunately allow us to reasonably begin to work from home. Today, 98% of our Sapiens worldwide employee base is successfully working from home. Gradually and carefully, employees are starting to return to our offices. Second, from a business perspective, the sector we serve, insurance, is an essential business that must continue to manage risk. Sapiens deliver a core system solution for insurers, and this has assured customer stickiness. As a result, we have very high visibility of our revenue stream from existing customers, which is almost 90% of our revenue. These factors give us confidence for the remainder of the year. That said, we face some headwinds. Macroeconomic uncertainty is impacting the timeline to close new business and commence implementation. As a result, we are revising our 2020 revenue guidance to a new range of $368 million to $377 million, as compared to prior range of $377 million to $383 million, reflecting 2% reduction in the midpoint of the range. The operational efficiency measures we took to adjust our cost to low revenue expectation and our ability to do so across all departments differently allow us to maintain 2020 operating margin guidance unchanged in the range of 16 to 16.5%. I would like now to turn the call back to Roni Al-Dor for closing comments. Roni?
Thank you, Roni. The customer success team is doing an outstanding job providing critical support to our customers globally, while our global sales team continue to be focused on signing new businesses in the new market conditions. Our leadership team remains focused on delivery growth and margin expansion as we execute against our long-term objective of improving shareholder value. Sapiens is well positioned for success and growth. I would now like to close our prepared remarks and open call for questions. Operator?
Thank you. Ladies and gentlemen, at this time, we will begin the question and answer session. If you have a question, please press star 1. If you wish to cancel your request, please press star 2. If you are using speaker equipment, kindly lift the handset before pressing the numbers. Please ask your question in a loud and clear voice. Your questions will be polled in the order they are received. Please stand by while we poll for your questions. The first question is from Mayank Tandon of Needham & Company. Please go ahead.
Thank you, Roni and Roni. Congrats on the quarter. Very impressive in the face of this global pandemic. So I wanted to first start with just the shift to cloud. Roni, I think you said that you think this could be a potential catalyst. I'm just wondering, how are you addressing the sales challenges in a virtual environment to be able to take advantage of the opportunities in the market as more carriers start to really embrace the cloud?
Yes, hi, Ryan. As you mentioned, all digital and cloud can be more interesting at this time. As you know, we have more than 400 customers worldwide. So we are going to each of them with our managed service approach, it's including cloud, and we are bringing more and more opportunity to this area. So that's definitely from the existing clients, and almost most of our new prospects is also looking for cloud. So we did a lot of investment in the last few years, and we are ready.
Okay, so you haven't really had any challenges in terms of closing these deals and converting these opportunities due to the virtual nature of the sales process. You've been able to navigate through that and still close at a pretty healthy rate. Is that so?
No, in terms of closing deals, as I mentioned in my call, that we have, it's not related just for clouds. We have challenges for many for getting more pipeline. The deals that we have on the table, it's okay. Sometimes we have delay, but it's not related to the cloud.
Got it. Okay. I wanted to just shift gears to the model. Maybe, Roni, if you could comment on the trajectory of revenue growth and margins. Any changes because of the pandemic, or do you think it's going to be following the same seasonal pattern that we've seen historically on both the top line and the margin front?
Hi, Mayank. This is Roni G. I think in this time, our business model shows its strength. We are selling core system solution to insurance carrier and have a very high visibility and stickiness, which is very important at this time for a very long period. This is a core system solution and how our customers run their business. So in terms of our revenue, every year we are entering about 90% of the deal are coming from existing customer. This is implementation that started from last year and customer post go live. We see minimal impact due to this pandemic on this level. Yes, there are some upside and even downside in this area. We are focused on customer success team to be able to do cross-sell to existing customers because it's easier in these days. In the sales cycle, as Roni mentioned, we see longer time to close the deal. Although beginning of the year, even in March and April, we signed new opportunity. We see some delay in people taking decision and closing the deal. Some of them are signing, going to blueprint, and then put this on hold. So we see some delay. So we are seeing more revenue from existing, slightly less from new customers, and this is the reason for the change in the guidelines. If we look organically, we are expecting to grow this year about 9%, and on top of that, add additional M&A. So this is the guidance that we show. In terms of profitability, we are able to adjust our cost structure according to the revenue level, and this is what we did immediately when this started. And as you can see, we split this to two areas. The first one is a vendor that we are working with them. For example, event, training, flights, all of expenses around facility will be able to monitor and reduce. And in the terms of the employee, we adjust the employees to the revenue level. So if we have some slowdown in revenue, we do some freeze on hiring, and therefore been able to protect our profitability. And this is the reason we've been able to remain our profitability level between 16 to 16.5 unchanged, and we started the year even with 16.1%. So overall, I would say the business model continue, and we look forward to it. Yes, there is some slowdown due to pandemic, but overall stay the same.
Got it. And then just very final question here from my perspective. A lot of the companies that have large delivery hubs in India have had supply side constraints just because of the work from home shift. It doesn't seem like that disrupted your model. Could you just comment on how you address those challenges, if there were challenges that you faced when the lockdown was announced in India in late March? Thank you.
We started mid-March event to do some testing, working from home for the entire company globally. Basically, for 3 days, third of the company globally went to work from home, and we measure if we are capable of this, are we missing laptops, firewall, and all of that. And basically, we've been able to do this successfully and work from home. As I mentioned, 98% of the employees are working from home. Regarding India, we had some concern. The reason is not our offices or the employee, is the infrastructure that exists in India as a country. But as of now, we see that this is working well. We are being able to provide services in terms of delivery and R&D to internal and for our customers. So currently, we do not see any impact as of today. We hope to continue also in the future.
Excellent. Thank you so much.
Thank you, Mike.
The next question is from Bhavan Suri of William Blair. Please go ahead.
Hey guys, thanks for taking my question. Glad you're all safe and well. I guess I wanted to touch a little bit on, first of all, what you're seeing with the existing customer deployments. So obviously, as you think about existing customers rollout implementation, in late March, early April, was there a pause maybe and that's picked up? Was there people sort of reevaluating pacing of deliverables and that's changed? Just some color of what you've seen that might have happened in the last couple of weeks of March, early April, and sort of now, say 4 weeks later, sort of what that trend looks like.
Hi, Bhavan. I will take this. 15% of Sapiens revenue is coming from customers that we signed last year, and right now are being in the middle or early stage or end of the stage of the implementation of a core system solution. In the company, we are monitoring this area. Basically, we are monitoring all the key accounts and major revenue level, and we put also attention into this. We thought that there will be 3 opportunities or 3 options to them to work. Either continue as usual or to postpone the implementation to a longer period, which means slightly revenue this year moving to next year, or to put the entire thing in freeze. As of today, and we are already 2 months into this, we do not have even one customer that stopped implementation. All the customers continue. I must say that there is potentially some discussion on extending the time, but not putting the entire project in freeze. We do not have a situation like this. So overall, small impact, not material. And again, this represents about 15% of our revenue level.
So let me just drill down that a little bit. So when you look at the guidance, Ronnie, and you've got the potential for extending the timelines for these projects, have you built that in, or how much have you built that into the guidance today? I understand the new logos will be tough, and that makes sense for everybody, especially for complex kind of mission-critical systems. But for the existing guys, how much have you sort of thought about building that into guidance?
Basically,
sort of a risk analysis of the projects that are going on. Yeah.
we factor some delay, not material one, but some delay that revenue will be shift from 2019 to 2020. But as I mentioned earlier, we are right now extending or increasing the team of customer success. We see right now opportunity, and not really opportunity, we are doing so, of increasing the revenue that our customer that post go live and can consume from us additional services. Ronnie mentioned digital solution, offshore or capability that other companies cannot fulfill. So we are compensating this with existing customer that post go live with additional services that we can offer. But we factor this in already.
Got it. And then I want to turn on to the life and annuities, the reinsurance business. You know, if I look at that, you know, you sort of thought about, you know, that business to be stable to flat, but you've now had some wins, you know, given the investment side. I guess as we think about life and annuities, how does that layer into the growth initiatives? You know, is this implied in growth this year? Do you think that adds to some of the growth this year? Or do you think that's more like 2021, 2022 when that plays out?
I think we saw already shift in the life area in terms of growth. We already started this last year. We win some deals. I can say right now that we have also some opportunity, nice opportunity that we are working on. Q1 was growth for life, more on the European side, less on the USA side, but overall the entire life is slightly growing. Single digit, but growing.
Gotcha. And then one last one from me. You've talked about sort of this shift to managed services. You've talked about cloud, but historically you said there's been very little interest in cloud. And so I'd love to understand sort of, not this year maybe, but in the next 2 to 3 years, how big, excuse me, how big do you think the managed services business could be as a percentage of revenue? And obviously that's a very nice recurring piece. And then what are gross margins in that business like, Ronnie?
Today, we do not have significant amount of managed services / cloud revenue, but I would say that all the deals that we are signing, I would say majority of them are managed services / cloud opportunity. So think about this 500 customer, we are signing, let's say 30, 40 new deals every year. This is the piece that's moving to cloud / managed services. It can go to, let's say, 15%, 20%, let's say in several years, not now. In terms of profitability, in the initial days, it's cost us more, but the beauty of this creates additional stickiness and higher profitability, let's say in year number 2, 3, and going onwards.
Thank you, guys. I appreciate that, and stay safe. Thank you.
Thank you, Bhavan.
The next question is from Bryan Bergin of Cowen. Please go ahead.
Hi, thank you. You're doing well. Wanted to ask if you can give some comments on client behavior that you're seeing based on the customer size. And I'm curious if you're having different conversations or seeing different priorities at some of the larger insurance organizations versus the traditional base in the lower tiers.
Hi, this is Ronnie. We don't, the behavior of 400 customer can be different for each one of them. I think the main focus right now from the customer that's in production is make sure that we are able to maintain them. We can work remotely and we can add more value if they are looking for. For the transformation project that we have, the main challenge is in the work from home, mainly in Europe, because most of our clients in US regular to work from home. There is few customers in Europe. This is relatively new for them and also new for our employee from the rest of the world. But we don't see any big changes on where they really want to invest. For sure, everything around digital and digital enable, and this is something that's interesting to all of our customers.
Okay. And then as we think about the progress here over the next couple of quarters, do you expect to see the June quarter as a low point and a build from there? from a growth standpoint, or do you expect it to be relatively even as you go through the balance of the year?
Hi, this is Ronnie G. I think if we look at the yearly guidance, we are still focusing growth area. As I mentioned earlier, it's about 9%. We are planning to grow quarter over quarter, steady state. The new layers are building on top of each time, so we do not have any drop. We are going to continue adding additional layer of revenue quarter over quarter.
Okay, that's helpful. And just last one for you here. Has the current environment changed anything around capital allocation as it relates to M&A? Obviously, you have the dividend announcement here. I'm just curious on the M&A front. Anything you're around commentary on pipeline and the valuations you may be seeing?
Hi, this is Ronnie. M&A is part of our strategy, so we didn't stop looking into M&A. Yes, we are looking at not big companies. We are looking to medium to small size company to mitigate the risk. We understand that also the due diligence process will be remotely, so we are conscious about this, and we make sure that we reduce the risk as much as possible. We are looking to do M&A. We think that the valuation will go down. We think that the private companies still did not digest fully the change in the valuation. It will take months, 2, 3, to adjust and then be more realistic in terms of valuation, and we will be ready. As we mentioned earlier, we took a loan of $20 million immediately as this pandemic started to be able to execute when we find the right opportunity.
All right, thank you.
Thank you.
The next question is from Tavi Rosner of Barclays. Please go ahead.
Hey guys, thanks for taking my questions. Most of them have been answered. I guess if I can have just a final one on the guidance, you gave a lot of color. If I put in all together what you've said, correct me if I'm wrong, but it sounds like most of revenues have been recurring, and therefore the decrease in guidance reflect to some investment being delayed by some of your clients. However, if I look at the long term, the current situation has bring awareness to more and more insurance companies and the need for them to digitize their solution. So I guess looking into 2020 and 2021 together, would you say that the outlook now is better than what it was a couple of months ago, driven by the increase in potential new contracts on the road?
Hi, Tavi. This is Ronnie. I think the outlook is more relaxed. I think in the early days it was very much concern, and right now it's a little bit company are releasing the restriction. We'd like to give some color. I think Ronnie mentioned this when he talked. The digital is becoming more and more demand from our customer. Recently, we acquired company in Germany, Sumkumu, and we see higher demand than we expected when we acquired this company. So we see revenue there above our expectation because of digitalization, and they are supporting us in the revenue, of course, starting DACH and potentially outside of DACH. The growth rate that we are seeing right now is about 9%. Of course, if the pandemic will continue for a very long time, this will hurt us because it will not allow us to close more deals. When we talk to analysts, they are saying that once this is over, a lot of companies that have legacy solution will quicker their decision in order to move to a modern technology because this environment do not allow them easily to work from home. So the environment, the macro will remain the same, let's say after we are out of this pandemic, but if it will stay for longer, for sure there will be an impact on us.
Great. Thank you, Ronnie, and congrats on the strong result.
Thank you.
Thank you.
If there are any additional questions, please press star 1. If you wish to cancel your request, please press star 2. Please stand by while we poll for more questions. There are no further questions at this time. Before I ask Mr. Al-Dor to go ahead with his closing statement, I would like to remind participants that a replay of this call is scheduled to begin in 2 hours. In the U.S., please call 1-888-326-9310. In Israel, please call 03-9255-925. And internationally, please call 972-392-55925. Mr. Aldor, would you like to make your concluding statement?
Yes. Thank you to operator, and thank you to all the participants who joined us today. Have a good day.
Thank you. This concludes the Sapiens International Corporation First Quarter 2020 Results Conference Call. Thank you for your participation. You may go ahead and disconnect.